Welcome to Share Talk, the only podcast where investors come first.
Today we have Hayden Locke, CEO of Emmerson PLC, which is a potash development company focused on projects in North Morocco. Morning, Hayden. How are you?
Morning. I'm very well.
That's good to hear. You've just released your scoping study to the market. So my first question is going to be, how did you achieve this ahead of schedule?
Yeah, it's a great question. We were very fortunate that the engineers that we engaged, the independent engineers that we engaged, Glover Associates, had their team available and ready to go immediately. So straight after we listed and raised the money in June, they commenced work on the scoping study. And I think it's really a testament to the work of our team in Morocco and our consultants led by Golders, who were able to address all of the key risks very quickly and work through it methodically. And yes, I think it's just hard work really that got us here ahead of schedule.
Okay, and with the Khemisset project, how is it separated from other projects globally? What's the difference there?
I think the major difference is the capital cost, pre-production capital cost, which is about $400 million, including a $90 million contingency. What's really interesting about that is it's much less than half of the global peer average of capital intensities for potash projects globally, and about a third or even less than a third of the average Canadian potash mine project cost. So very, very low capital cost of production, which means that in any potash price environment, it's likely to be financeable. So what really sets us apart, first and foremost, is our capital cost of production. Can
you talk me through the economics?
Yeah, the economics are very robust. So we have a headline NPV10 of nearly $800 million and an IRR of about 30%. And that assumes today's price run flat through the model. So at those sorts of prices, we're forecasting that we'll make an average EBITDA margin over the life of the mine of about $240 million per annum, an average steady state post-tax cash flows of nearly $190 million per annum. But what's really interesting about this project is if we run a stress test on the much lower potash prices, so the lowest potash price in the last sort of 12 to 15 years in Brazil was around $240 a tonne. If we run it at that price, this project is still forecast to make average annual cash flows of around $80 million per annum. And that, from a management team perspective, is very interesting because it means that regardless of what happens to potash price, we believe that this project will still be financeable, which is incredibly rare in the potash industry. So we're talking margins in excess of 60% at current potash prices. So really, it does say that this project is both low capital cost and high margin, which is exactly what we expected as a management team.
Okay. And so impressive figures. I mean, what is it specifically about the project that means that this has been achieved? Is it a different approach? Can you explain a bit more?
No, it's not a different approach. We're doing the standard conventional underground room and pillar mining. We're processing in a very conventional manner. So it's nothing really to do with a different approach. But if people have been following us in the market, they will have seen we've put out a number of announcements for key components of the project where we've made significant cost savings. So the areas that we've made cost savings are, number one, access to mineralisation. We are able to access our mineralisation using a decline rather than a shaft, which saves us relative to our Canadian peers over $1 billion. So huge cost saving and access to mineralisation. And then at the back end of the project, it's really about access to infrastructure. So Morocco, the King of Morocco has invested extensively in infrastructure in Morocco, and we benefit from that. So I'm talking about access to electrical infrastructure. All of those things add up to significant cost savings, and in every one of those aspects, we've saved over 90% relative to the vast majority of our peers, and it adds up to billions of dollars of cost savings.
Okay, so scoping studies now out the way. What's the next step for you?
So this is a really good start for us. It basically tells us that technically the project is viable. And of course, economically, we've taken a really detailed look at those economics, which show that regardless of potash price, it's very robust. It'll return a lot of cash in all price scenarios that we've run, which is really good from the financing perspective. So now we move on to the more detailed studies, which is really trying to nail down which solution is best, and then testing those solutions to make sure that they're absolutely technically viable. The next phase drilling undergoing at the moment, which has the dual objectives of upgrading the resource to the higher competency indicated. That's really one eye on having a reserve in the next phase of study. So is something that we can actually bank and finance. And the second objective, which is very important, is to get enough material for us to complete a bankable metallurgical test work program. What we have is confidence that the process flow sheet can produce the product. Banks like to see that tested with empirical data and show that we've actually shown we can get to the final product. So that'll occur in the early part of 2019, and the goal there is to make sure that what we deliver from a financing perspective, the banks can hang their hat on and would be willing to give us money on, and then moving straight into the more detailed studies, the feasibility studies, which really start to get down into the nitty-gritty detail of the cost and operating cost estimates for the project and the design itself.
Well, it's been good talking to you, Hayden, and we look forward to catching up to you in the future.
Thanks very much. I appreciate the time.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.